My Sennheiser for some reason wasn't working, so I will make sure to mute my mic, everyone, once he starts to answer a question. That way you don't get any feedback into the room. So good stuff. All righty, Spec, you ready to go?
Yeah, I'm ready.
All right, awesome. All right, so for those that do not know, I was actually introduced to, I was introduced to Spec through BlackBoxStocks. He was in there for a long time in the Discord section there. We chatted back and forth, and then on Twitter, always going back and forth on things. And he's a really good trader. Been at it for a long time, has a very deep knowledge in the market. So please feel free to ask any Spec, I think can you turn your volume down just a little bit? That way it doesn't feedback on us. My apologies. So yeah, if you have any questions, please feel free to ask, and let's go ahead and get into it. So Spec, why don't you tell us a little bit more about yourself, how you got into trading, what was your draw, and just your initial first, I'd say, year as a trader. Give us some insight on that.
All right. Well, let's see. That's been about probably about 5, 6, 7 years ago. Background is before that, I was a developer, consultant, ran a consulting practice around software, and was doing a lot of traveling on the road. And I was kind of getting to the point in my life where I was like, well, there's a limit to how much I could make. I was making great money, well into the 6 figures, but there was a limit, and it was all tied to how much time I put in, right? There's a lot of billable hours, managing a lot of people, and I was just kind of like, this is not what I really want to be doing for the rest of my life. So I had to look for something else. And so then I said, okay, well, what can I do that if I can get really good at, that there's really like kind of a limitless, there's not really a limit to how much one could make. And you can run your own hours, and I don't have to worry about having employees or that. And so that's what drew me to trading. Now, the first year, well, when you've had a lot of success in your previous professions and work you've done, and you bring that to trading, it's the recipe for a disaster. I probably lost well over $100,000 in the first year, thinking, hey, it's easy. And I get it. Oh, this news comes out, and this is what, they should do this, right? So every single mistake you could possibly make, I did it. And I was very slow to learn, because you're just kind of like, look, I get it. And look, I was right. I was eventually right. And I just didn't really understand how the markets move, right? Like there's a little bit of an art to it, and there's a behavior to it that I just never knew. And then some of the other issues is that when you come from a work atmosphere where the more work you do, the more things you do, the more productive you're being, and that translates to, I should be making a lot more money. Well, that doesn't translate to the trading world. Not at all, right? It's really about being selective and just stepping back and kind of making plans and then executing, doing small windows of time, and that's how you get paid. So it's completely different from everything I've done in my past. And it took me a lot of years and a lot of donations to the market to try to finally go, that's how it's doing. That, there's finally there's a light bulb going, that went off. And fast forward a few years, some of you probably seen my alerts in some rooms or on Twitter, or some of the posts about the results I had. That's what it took. It took a lot of pain. and realizing that trading is a different animal than anything you've done before that was in the regular work world.
Yeah, and it seems,
the path.
I was going to say, it seems that a lot of individuals get hung up with that that thought process that if I do more work, I will get paid more. And I agree with you fully. Sometimes the best thing you can do is do nothing at all. And that's very counterintuitive for, I would say, alpha personality individuals that are traders. A lot of people that have had great success, like yourself and many others in this community and other communities, that they have that thought process. But you know, that's the big catch-22 when it comes to trading. What would you say was the aha moment for you? Like, was there one specific ticker, one specific phrase from something you watched or read? I mean, what was your initial aha moment?
Honestly, I got tired of being read. I was just pure exhaustion. I almost feel like I was an addict and I hit rock bottom. And I was like, okay, I have to stop doing things the way I've been doing it because it's just insane. It's just not working. And you know, I had to just stop. That was it. I had to hit rock bottom and go and realize that you know, what I was doing was wrong. Like, it was crazy because I can't tell you the number of days that I'd start the day and I'd be up $3,000 only to be down 7 by the end of the day. And I'm like, that's just stupid. And then everybody would just tell me, well, you're an idiot. Why don't you just trade the first hour, you make the $3,000 and walk away happy? And that's actually one of the things that I ended up doing. And I said, fine, yeah, you know, because I was always like, I need to make 5, or I need to make 10, or I need to make some dollar amount every day. And I was like, you know, because I created this fake number in my mind saying, this is what I need to be able to do. And that I was measuring my quality or my definition of success was based on how much I was able to make in a day. That's another huge mistake, in my opinion. Just absolutely, you know, horrible way to be thinking. And it comes back down to that productivity. So then I had to make that change. I don't want to be, you know, it's not working. And then it's just kind of like, wait, what, you know, it comes back down to, why was I getting into trading? You know, you have to kind of step back, right? You're trying to learn something new. And so you put in all this time, but then you step back. And I was like, you know, look, I'm actually regularly green in the first hour, right? So why not just trade that first hour or two? And you know, you might take another trade over there if you're bored, but really look how much like one can make in the just being really good in the first hour or two, and then you have the rest of life for you. Go to the gym, go spend time with whoever you want to spend time with. You've got that, right? And so I changed my measurement from how much I made in a day to how well did I execute on my trades. Right. And so by changing how well I executed that measurement from, you know, how profitable I was, like actually, I'll even say I could be read on a day, but if I executed correctly, where I had a thesis, I had a plan, the trade idea just didn't play out the way I wanted. And I stopped out properly and took the loss that was appropriate versus letting it ride super red against me or something like that. I'm red on the day, but I'd consider the day a success, because it's how well did I execute to my plan. And when I started focusing on how measuring the quality or my success by how well I'm executing on trades, things changed a lot. Like, it's just, oh, okay, I'm green, great. Okay, another green day. Oh, hey, look, I have another green day. And that was really a big change. Is stop measuring by dollars and measure by how well do you plan a trade and how well do you execute to your plan.
You know, and I'm glad to hear you say something like that, because we try and resonate that with a lot of people. But us as mods, people are used to just hearing the same thing over and over from each one of us. And in knowing that another trader sees it that way, it really resonates what we are trying to tell people, that it's not how many trades you make, it's the quality of that trade, and did you actually have a trade plan going into it. For you yourself, your trade plan criteria, how would you formulate it? What's your trade logic when you're building? Let's say Baba's setting up with your specific thing. What is your style of trade logic? How do you verbalize it?
Everything I do is, well, let's step back. And I want to go back through a little bit of my history. Is I came from, when I entered the trading world, I did what probably most of you have done, is penny stocks, small caps, and that's where I learned about momentum and how momentum works. And then I started looking at, well, I didn't really like kind of the news and being able to, can I get borrows to be able to short these small caps? And there's all kinds of issues that came up. So then I started coming back down to, let's look at regular stocks and let's look at options. And so I spent some time learning how to trade options. And now I kind of look at myself as I'm a momentum trader that uses options to help milk that momentum in regular stocks or optionable stocks. So to answer your question, like for my steps, what I'm looking for are things that are momentum based. So I'm looking for trades that I can normally take inside of, where I'm going to get paid inside of anywhere from 10 minutes to maybe an hour or 2 or 3. But if there's an inflection point on a big name where something is going to make a move and it might last for 2 or 3 days, then I might be in a position where I'll scalp and make profits in the first day for 90% of that position. And I'll leave the last 10% to continue. But what I'm looking for is, or my go-to setups is looking at a daily chart, looking at a news or some sort of catalyst, and then waiting for the chart to say, it's time to go. And then establishing a risk reward. So every time I'm approaching a trade, the first thing I ask myself is, what am I risking? So, and how do I define what that risk is? It's, like, let's say I'm going long on something. Then I'm going to be looking at, typically I'll either be looking at the low of the day to define my risk or the previous low. And that's the other interesting thing, is when I was starting, I'd go with way too much size. And I'd use, I'm going to use 10 cents as my stop, and I keep getting stopped out, little loss all day long. And now I traded much smaller, like a lot smaller size than I used to, but my returns are so much better because I'm establishing those stops to be at previous lows or at low of day for that long idea. And that's where I'm establishing the risk. Now, the second part of the question I ask myself is, okay, what's the reward? Is it worth getting into this trade, right? Like, is it worth my time? And so then I look at the trade and I go, okay, well, if I'm right, where is this going to go? Where should it go? And I've been somewhat somehow I've been fortunate enough to have been successful to be able to anticipate relatively well where things are going to end up going. And so now I have two pieces. I have what is the risk, what is the reward, and if it's at least 2 to 1, preferably 3 to 1, I'm going to take the trade. One more thing on that, though. I'm not just going to go there. I'm going to take a look at, it has to be where the price action is also confirming, where you start seeing higher lows and you see some volume where the buying is coming in. Maybe you see some option flow from BlackBox that says, hey, they're starting to jam into this thing. But if all that lines up, I've got myself a trade. So I hope I answered your question.
Oh yeah, definitely. That brings it into it. So, everyone, that's kind of the idea we try and get over, as well as if you're looking for a long thesis on things, you look for that previous low. You're identifying key support and resistance areas. And yesterday we had a position we were looking at with Discover Financial, And I kept saying the statement, you know, it's just not worth it to get into it. It's not it's not paying you enough for your time. And I made the offhand comment this morning in the main thing there that, you know, you want to make sure you're getting paid for your time. If you're not getting paid for your time, it's not worth doing. And that's the same thing with trading. Are you being paid for the risk that you're taking to make this initial trade? So no, it's great to hear, to hear that that's the same thing. Many momentum traders, that's how we think. But as you're starting into this trading career, that's a crucial step a lot of people skip is where is a realistic point to get out for both a stop and a profit, and sizing. That's a very big thing. Spec, if I may ask on that, you alluded to it a little bit a while ago. What would you say? Let's say BA's got a position coming on. You see, you can probably make 2 or 3 points on it, give or take, with a risk of a half. What would your sizing be? 15 contracts, 10 contracts? I mean, obviously it's dependent, but do you find yourself sizing under 20 contracts and making more trades, or going for 3 to 5 trades, but in a larger contract size? If you don't want to say specific size, I understand that, but just a general idea.
Actually, so that's a great question regarding sizing, and so people ask me these kinds of questions a lot, and I actually used to like to say, you know, it doesn't matter what I do, because
that's a good point. Yeah, because everyone,
right? Because you have to match your sizing based on your account, right? And what I do doesn't. That's why, so I'm not trying to say, well, here's what I do. What I'm trying to say is that what matters is you have to look at a few things when you're looking at your trades and with a sizing, and it's based on. For me, it needs to be based on what your account size is, and what you're comfortable risking against. So whether that's 1 contract or 100 contracts. It just really depends on what your account size is, and yeah. So like that's one of my things. Like I hate talking about, hey, look how much I made. Like you'll rarely, if ever, see me post, here's what I made, because it doesn't matter what I made, right? I don't want to, like, what I know when I was starting out and when I was learning, and I saw people post, oh, they made $8,000 on this trade, or it made something. The only thing it did was it made me probably jealous. It made me angry that why didn't I make that? And so I kind of made a conscious decision at one point to say, look, I'm not going to ever be that guy again. I'm going to be the person who says, hey, look, here's where I'm entering, here's what I'm risking, and here's where I think it's going to go. And then let's see what plays out, right? And fortunately, it's been playing out pretty okay, at least this last month, and it's been incredible. But that coming back down to that question, it really matters on what your size of your account is. I had posted something earlier about when you get these trade alerts, when people get trade alerts, and if you've got a small account and you're like I say, there's an article I posted on my website. If anybody ever wants to look at it, it's called The Power of 1%. And I go through and give an example of, if you have a $10,000 account and you can make $100, it's not just $100 that you got to be risking. You got to be looking at, hey, I'm going to risk maybe $50 to make 150, right? And so then if you've got a trade alert out there saying, hey, I'm buying this contract at $4 and I'm risking $2 on that, you don't go into that trade because your account can't support it, right? So you wait for the kind of alert and the kind of trade that matches the kind of contract sizes that you can take. So I know I went roundabout and I didn't really answer your question, Creed, but I hope it answers my approach to contract sizing. So I look at
that's a great way of going about it. And that kind of goes into the whole thing about how people try to follow people into things, and they get to that mental status. And I want to cover that a little bit as well on the emotional part. But yeah, just because you see person XYZ being able to trade 100 contracts, 500 contracts, you as an individual, one, just getting into this, you do not need to be taking on that kind of responsibility, because when you place a trade, you are taking on the responsibility of risk management and many other things. But I fully agree with him on that as well, people, that you have to size it correctly. And we'll link to his website later on in there. That way you guys can go check that out, the power of 1%. And that's why we always say any strategy you have, you got to make sure that it is scalable. But if you can do it with if you can do a 1% with $1,000, you can do it with a 10,000, you can do it with 100,000, because the only difference between the scaling is your emotional control over that, and whether or not it is a responsible account management skill to put on that kind of size. So it kind of spirals into this next question, though. So like you said, you've been doing it, 5, 6, 7 years on this, and you've been through the ups and downs. We've had some wacky markets the last half decade at that, not even counting the full decade. We've had some wacky markets. How have you learned and progressed as a trader to manage your emotions during a trade, before, after, and during?
Well, that's what I found is that what gets you emotional is when, let me phrase this. I actually have a way of describing this to people. If you're emotional about the trade, you've got the wrong damn size.
I like that.
And if you got one contract and you're emotional about it, you really need to spend some time thinking about yourself and where you are with what's going on. Because this is trading as a business, risk is a part of it, and if you can't handle doing the risk, then you really, really need to dig deep and decide if this is what you want to do. Now, with regards to risk reward, right? What helped was, so I used to use way too much size, because you're like, hey, I'm going to grab 20 contracts or 10 contracts or 50 contracts on something or whatever it is, and you're trying to go, oh, that's going to go make 20 cents on this thing, and like, hey, great, I made $1,000, and then it goes 40, goes 40 cents against you or something like that, and you're like, oh man, I got to get out. I got, it was just a, crappy place to be. And so that evolution went from me trying to scalp these small baby moves in a chart to me looking at bigger picture plays and going from, I'm interested if something's going to move 5, 6, 7 points, right? And I can see that has the potential to do something like that, or say maybe it's 2 points, but at the end of the day, it has to be the right risk reward. And I'm looking for, instead of being in this trade for 30 seconds or 5 minutes, to be in something that's going to actually give me a trend where I can get maybe 1, 2, maybe even 3 waves out of the trade. And what allowed me to do that and be comfortable with it, or actually I have like 3 different things that I do. One is the size, using the appropriate size, because now I'm kind of like, hey, look, I'm risking $500 to make $1,500. And I just got to be comfortable. I had to basically establish I am totally comfortable losing that $500 if I'm wrong. And then the second part is walking away. Like depending upon the time of the day, like if it's where we've moved out of the first hour, then at that point it either needs to trend or not trend. And so I'll go to the gym after the first hour, 2 hours. So you establish your trade, establish where your stop should be, set your alarms, and then walk away and go enjoy myself and go do something else, and then set alerts and go, oh, look, this wants to pay me. And then but basically I try to not watch every single candle. I like to look at how is the things reacting to different price levels when it gets to those price levels versus watching everything in between, because that's exhausting, totally exhausting. It brings all kinds of emotions out that's unnecessary, and it makes you second guess yourself. So those are I guess 2 or the 3 things that I do. I can't think of I'm a little tired and I can't think of the third thing off the top of my head right now. but definitely setting stops, walking away from the trade and letting it work or not work are a couple of really big things. But yeah, I think that it's really, really hard as new traders, and sometimes even I get caught, you know, when I get too much size on something, I'll still make that bad mistake where I'll put too much size on because I get too excited, and I have to always control myself. Just let the trade work. Like, stop over managing it. Stop micromanaging. You have zero control. There's nothing you're going to be able, unless you're in a low flow, you know, type of situation, or low volume type situation. You have zero control of what this ticker is going to do. So why are you sitting there, you know, being, you know, very uptight about what's this candle doing, what's that next candle? If you've sized correctly, you entered correctly, and you've set your risk reward correctly, it's either going to work or not work, and you just have to let that play out.
Yeah, it seems a lot. It seems a lot of individuals have the issue with the simple concept of just let it go. And yeah, with a lot of hyper successful individuals, they end up coming to trading to compound their gains. And whenever we work in life, we've had to manage other people to do things. Many people that are in the community, many others, they're managers in life. I know several of our mods, they're owners of their own businesses, and they have employees, so they have to manage those employees. And this is the one thing that you just can't manage. You know, you have to let it do what it's going to do. I guess, you know, a really big question for this is how many different styles do you think you went through? So as far as you know, only doing moving average, then doing ride, then not, how many different I guess air quote strategies did you go through before you started to say, hey, this is what works for me? You think it took you a while, or did you go through 100? Did you go through 10? You know, what was your experience with finally finding the spec trades?
It's a great question. I don't. I think I used everything, all kinds of moving averages. I mean, all kinds of studies and everything. And then one thing that I noticed over the years of looking at screens, the thousands and thousands of hours of screen time with all these different technical indicators, is that the different technical indicators would say the same thing. So some people love the cloud, the Ichimoku cloud. Some people like moving averages, crossing. Some people like the TTM squeeze. Guess which indicators I use today?
Would have to say simple 9, 20, and possibly a MACD or something of the similar.
Nope, not at all. All I use is volume and VWAP. Those are my two primary indicators on a chart, and that's it. Secondary on another chart is I use the, what do you call it, volume profile. And that's mostly for seeing large range moves over multiple days. Maybe something that's moved over multiple points, like large moves. That's where I use volume profile, but I don't use volume profile for something that's just a minor move. I don't think it makes sense for that situation, but that's it. I used to have all these, I had everything on my charts. I don't use them anymore. I'm sorry. The other one I use is pivot points, right? But basically, at the end of the day, when it comes down, yeah, and just standard pivot points. And but what it comes down to is I'm looking at support and resistance, right? And then I'm looking at how's the price action in relationship to those support and resistance levels. And I'm looking for major levels. So I'm not looking at, I mean, that's really all I do. Is I've come down to the point where I can look at a chart, I can look at a support and resistance, I can anticipate where something is going to go, and then I can establish risk reward. And because I can anticipate I can get these incredible entries where my risk is nothing. Like you'll see some of the things that I'm risking 20. Like what was the other day? Friday. What was it? Google, I think it was that I risked 20 cents and made $6 or something crazy like that. I think it was $6, maybe it was $4. I don't remember, but it was like I look for normally a 3-to-1 risk reward ratio, so I'm risking 20 cents because I want to make 60 cents. But because of the entries and being able to look at those higher lows and where things are setting up, I can establish an entry, risk 20 cents, and where the chart is and where it's going to go. I'm ended up sometimes getting like 20, 30x on my risk.
You know, and that's something very important I think people should realize is that you don't need an umpteen amount of indicators. That's if you look at any of us mods, any of the BlackBoxStocks mods, when they post a chart, any professional out there, you're going to notice most of them, they never have more than 5 indicators. And Spec said something very important there, as well as that they're all telling you the same thing. And Spec, I don't know if you agree with this or not, but that it's not really the indicator, it's how you as an individual can dissect the information the market's giving to you, because everyone looks at support level, resistance level, and then if it makes your happy feel good for, you know, maybe a MACD, a VWAP, whatever, just for that extra confirmation of confidence, then that's what you need. But Spec, why do you think that so many new traders fall into that pitfall of 10,000 indicators? I mean, do you think it's an aspect of social media? Do you think it's pumpers? I mean, what are your thoughts on that?
No. Oh, it's very. I think it's very simple for why it happens, right? You don't know what the hell you're doing. That's why. So it's a crutch. You're looking for a crutch. You're stretching your arms out. You're grabbing at everything that possible to help you tell you what's it going to do. That's what's going on. And yeah, I'm not very a little bit of a jerk on that, but really that's what's going on. You don't know, right? And because you don't know, and I don't know, like the way so I changed my thing from needing this thing about going with these indicators and saying, oh, it's telling me now it's time to do this, it's time to do that, to where I look at it from a point of risk reward, right? Like if something's hit an extreme level, I'm happy to hop in and establish a risk and go, okay, well, what's my risk and what's my potential reward, right? And those are the kinds of trades I want to be in. And they're when tickers are at extreme moves, or they've broken down, or they've exhausted in one direction or another, and I have a bit of an edge. And I value risk reward calculation over indicators completely, because what I found is when I was looking at those indicators, half the times they got you in a third or halfway into the move. And that kind of screwed up my risk reward balance, right? Because it's like, if it's going to exhaust, if it's moving 50 cents and my confirmation's coming about 25 cents or 30 cents into the move, and then you're like, okay, let me get in there, but then it's actually a faker, and then it yanks. Then you're down 25 cents, but your reward was only 25 cents more or 20 cents more on the other side, right? So that balance didn't really work for me and my style, right? So it just, what I really look for is look for those support, I look for that support being established. Then I look for, is it going to have a higher low there? And then if it's got a higher low, then I'm going to go ahead and say, okay, here's what my risk is, and that reward's over here. If it works out, great. If it doesn't, it's a small loss. No big deal. That was my example in my tweet yesterday, where I had 3 or 4 trades that went against me. I lost probably 30, 40 cents on each contract each time I did that. But when I did have the 2, 3 trades that did play out, one of them paid me $2, and the other one paid me, I think, $3 or $4 or something like that, right? So when you've got wins that are in at least my particular style, right? Again, my particular style in the momentum is if I'm content to lose 30 cents or 50 cents on a trade because I know I'm going to be finding a trade that's going to end up paying me $1, $2, $3. And the indicators don't tell me that, right? Like, sorry, I really just use VWAP. I mean, that's what I do.
Yeah, and
it's a different style, but that's my style.
I was going to say that. Yeah, no, you're good. The thing about it is, yeah, just simple risk reward and VWAP are great. And understanding that, yes, you may, even if you have 3 or 4 losses, peeps, that's one thing to keep in mind is even if your system is 80% accurate across the board, we as traders can make north of 500, 600, 700 trades. So when you run the math on that, I mean, it's nothing to have 5 or 6 trades as a loser in a row, because let's say you got 100 trades only. 80 out of those 100 trades are going to work for you, but 20 are going to go against you. That's just the hard numbers about it. But no one ever says when that 20 is going to occur. It could happen onesie, twosie here and there, or it could be, it could be 3, 4, 5 in a row. Now, me personally, when I have more than 3 or 4 in a row that are red, that's a sign that maybe my mentality is a little bit off and I need to step away from the system. But it's something to keep in mind as a trader. And I see we actually got a good question here. Spec, how do you prefer to find your trades? Do you look at news headlines? Do you only look at the flow on BlackBox? Do you got some scans you run? What's your preferred expert method of finding the next moneymaker?
Well, for me, it's news. One is news in the morning. So I publish a watch list every morning. So if you follow me on Spectre Trades on Twitter, you'll see that. But how I generate that list is that I look at news. I'm also familiar with the set of tickers with where they are in charts. So I just know that, oh, okay, this might be setting up for something, but primarily news and gapping, pre-market gaps. And yeah, I think those are pretty much the 2 things. And between that, I can usually find something. Now, the challenge with it is sometimes you don't have news, you don't have that. And sometimes the market goes sideways. That's where I lose the most money. Is when the market is not doing some sort of trend and it's consolidating. And at that point, if I lose like 3 trades in a row, I usually go, okay, either I'm not on, my game's not on, or the market is not behaving the way it normally does for my style. So that's okay. I'll see you tomorrow. The market's still going to be here tomorrow. I don't need to force an income today. I don't have to force making money today. And that's another part of where I think new traders make a mistake is they're so focused on today. And you got to stop focusing about today, and you got to start focusing on the bigger picture about where are you going to be a year from now. And that comes back down to those trades, right? You're like, hey, this trade has to work out. This one trade has to work out. No, who gives a damn shit about this one trade, right? What you have to be focusing on is what's your process and system for the next 10 trades? And then what's your result on your execution on those next 10 trades? Do you have a system? Do you have a process, right? That's what you should be measuring on, not on whether or not you made money on this one trade. It's whether or not you have a system that you've developed that over 10 trades makes you green regularly.
That's really good. That's really good in there. And he said the magical P word on that, process. That's something we always try to hammer in, is you have to develop your own process in trading. And that trading, yes, there is an inherent small amount of luck into these things because it may or may not work out. We don't know the finite last little bit of detail. But you, with a sound process, a back-tested process, with a good sample size, you can then delineate that, hey, this works for me on these type of days, and this is what I should look for to be continuously profitable. Speaking on process and things of that nature, what do you, as you were growing and as you look back on who you were as a trader before, what would you consider a good sample size of trades before you start making modifications to a process you're trading at? Do you think it's 5 trades, 10 trades, 30 trades? What do you think would be a good sample size?
Well, that's a good question. I never, I didn't really, I had so much sampling, I guess, that I did. And I wasn't very, I didn't have a good methodology to establish my own trading process. So it's hard for me to answer that because I kind of went the really, really long route to finding what works for me. And yeah, so it's hard for me to answer, but I would say that if probably 10 to 20, measure off of that. But I would say do 10 to 20 on paper before you put real money on it. And and then you go, how come I'm always green when you do paper and when you do real, you're not? It comes back down to you probably have too much size, you have too much emotion involved about this. Well, actually, it comes back down to you're weighing in on this one trade has to work, as opposed to if you're thinking about it as a system and you're doing, hey, this is I am testing this across the next 20 trades, this process. I think that changes your way of thinking, so that you don't put too much weight on this one trade. You're kind of going, okay, hey, we're going to find out over the next trades if this process, it worked on paper, let's see if it works now in real, right? But if you go, it worked on paper, and then you're just now hyper-focused on just that one trade, you've created so much emotional weight on whether or not this system that you've developed is going to work, because you're thinking about just that one trade, not 10 trades or 20 trades. So whatever number that you need that you found in your back testing that works. It could be 3 trades. It could be 4 trades. Like, it depends on what your style is, right? You may have a particular style where you're like, I only trade events, major events. And let's just say, or you could have let's go into small caps type stuff. You may say, I am only going to trade biotechs when it comes out with some sort of, it gaps up big on some sort of FDA news, because 90% it just dumps after that. And so then you might say, okay, if that's your only trading, that doesn't happen every day, right? So you might have to test your process with only 3, 4, 5 things. But so I think your sampling size kind of depends upon what your system is going to be.
I like that. That's good. That's good. And that brings a lot of good key points into trading itself. Knowing who you are and what you're trying to achieve, then lets you build a small process. And then if you're trying to scalp things, again, with pharmaceuticals, biotechs, whatever, then you can go, okay, if I'm scalping, then 3 to 5 trades, I should be able to see if this is going to work. But if I'm looking for longer term positions or things of that nature, maybe I need to bring that sampling up. So yeah, it's definitely adaptive as we build those processes. And our process is always ever adapting. It has a solid core, but because markets shift, you do have to adjust 1 or 2 small things. You never want to make a major adjustment. I believe in Murphy's law of if it ain't broke, don't fix it. But you can always make slight adjustments. So that kind of comes into this next big question here. Where do you see yourself as a trader in the next 12 months and in the next 5 years?
Let's see, as a trader, continuing to do what I do, but my goal is actually right now to develop 10, 20, 30 awesome traders over the next year. And there'll be more. I'm not going to go too much into that, but that's my goal is to not necessarily be always trading myself. I mean, I love trading, but what I found is I love seeing light bulbs go off even more. And so I'm definitely looking to develop a bunch of traders, see them succeed, and then eventually building a bit of a what I'd love to see 5 years from now is where I've got some sort of a fund established where I have got 10 to 20 traders working in the fund trading for me and for themselves. But that's where I would love to see things develop, because one of the things that is kind of interesting that you develop is as you succeed at your trading and you've got your system kind of established and things are kind of going, your mind starts freeing up. And then the funny thing is now I'm looking at it like, wow, now, I mean, I only eat what I kill, right? And so you're kind of, now you're like, okay, well now I have to turn this into another system so that it doesn't always have to be just, you don't make money just off of what you kill. At least that's what my thinking is that yeah.
I was going to say, yeah, I like that idea. And that's another major reason of why we as the mods and everything here, we love teaching, because there's an initial thing about teaching yourself to trade and you get that aha moment, but there's a certain pleasure of being able to teach that to someone else and finally see that light bulb go, oh, this is what I need to be doing. And it also helps us out as a trader when we're showing and teaching our systems. It is a small form of accountability to ourselves, because like you were saying before, sometimes we'll put on too much size and we'll get emotional. But as a teacher and all that, we have to make sure that we are practicing what we teach. At least if you want to be a good teacher, that's what you do. So we're running into the hour mark on here. So Spec will kind of wrap it up a little bit here. What's some last really good, or at least in your opinion, really good final advice that you wish that when you started, someone would have looked you in the eye and told you, hey man, hey woman, this is what you need to do to be a successful trader, and this is what you should expect of yourself over the next 6 months, year, 2 years as you're developing yourself?
Wow, there's actually a few things. Number one, and I tell this to people that regardless of what account size they have, whether they have $1,000 or $2,000, well, 1,000 is a little tight, but I would say that if you've got, say, 2,000 or 10,000, or if you have 100,000 or $1 million, and you're new to trading, don't do what I do. Don't go all in. Don't go going, hey, I've got, I can do this. Start with small. Start with $2,000 and try to make $100 every day. That's one. Or make $50 or whatever it is. The point is that the best thing you can do is not to go make a lot of money. The best thing you can do is try to build that system where you can regularly make money consistently. Then you can scale up. That was number one. Number two is accept the fact that you don't know what's going on and you need help. I didn't, so I had to figure it all out on my own. And there's some great communities out there. And so find a community that you like. Maybe it's one, maybe it's three, but get help, right? There's a lot of resources, a lot of people who like to help. And three, education, think about it. You have to have the right mindset. You're learning a new profession, right? How much money does someone put into learning a new profession? How much time and money do they put into it, right? So it's actually a bit of a pet peeve of mine where people go, oh, I'm going to learn this from someone, but I don't want to pay them any money. And I'm like, that's the wrong, because you're doing the wrong, I think one's doing the wrong thing. If you can find the right mentor and they're going to help you. I mean, it's no different than putting money into a college education and learning a new profession, right? And you got to look at it as, I think one has to look at it like that. So the point is, set up a budget to learn, right? And if you don't have the budget, get a job, work. It's okay. Trading was always going to be there. Trade for a couple of hours in the morning and then go do your work. But basically, to learn to trade, start small, create a budget to afford, the mistakes you're going to make while you learn to trade, to pay for the communities or memberships or lessons or education that you need to eventually get there. And you don't want to be penny wise, pound foolish on this stuff, in my opinion. But yeah, I think those are the two or three of the main things, is that you gotta start small, build that process, build that system, go get some help to have someone help you build that system. Figure out if you're a swing trader or you're a scalper. If you're just kind of like one of those people, I want to put a large size and make 10 trades and just for 10 seconds and make $500 each time. Or if you're one that, like me, I don't like to risk a ton of money, but if I can risk $200 to make $2,000, that's what I like, right? I like, so I kind of geared and found a process that helps support that kind of pattern. But you got to really spend some time discovering what kind of process you want that fits your mindset, and then give yourself the time and budget to get there. I hope that answered the question.
Oh yeah, for sure. Very, very great information. All right, everyone. So this is us wrapping up on this portion. We'll make sure in the video to link to his Twitter and to the website there as well, where you can read the power of 1%. And another major thing, Spec, do you have an Instagram or anything like that we should make sure to include? If you do, you got one you want to holler it out?
No, I just have pretty much, there's Ed Momo on Facebook, and then my Spectre trades on Twitter. That's pretty much all I do.
All right. Awesome. Well, everyone, thank you for tuning in today. Spec, I look forward to doing this some more. Hopefully, maybe at the 6-month mark or in a year or so, we'll do another follow-up email to see how this year has gone for you, and see maybe who else you've influenced, who we as a group have been able to influence in the community. But again, thank you for your time, my friend, and I look forward to many, many more years of trading with you. And everyone in the chat room, if you got any specific questions or anything like that, please feel free to hit him up on Twitter. You can send us an email as well at bbteam@bullishbears.com, and make sure you keep an eye out for this video. We'll get it on YouTube or wherever they want to get it posted up. So great stuff, and thank you. Spec, you got any last words?
If I can say what? Yeah, one last thing. I want to say thank you for having me, and thank you for, I've been paying attention to what Bullish Bears has been doing. And I think everything you guys are doing as a community is absolutely wonderful. So keep up the great work. And thanks for also being a positive force in the community.
Awesome. Thank you. All right, everyone, we're going to wrap it up. Make sure 2 o'clock is when the next primary streamer will be on. And if you want to see more stuff like this, make sure you let us know, and let us know who you want to get on. Maybe we can reach out to some people if you've got some connections, and think about that as well. We'll be happy to give it a shot. But we thank you, everyone, and we'll talk to you soon. As always, remember, your trades are in the history. We'll see you around.